Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and try to learn something from it and plan for a better trade for the next day. So we had a flat close today. It was a range mode move and then finally close flat. Right, the Fyers are selling big, continues to do that since long, and we are at a very crucial support zone. Tomorrow we have an expiry, and this analysis for tomorrow, Jan 12th, Thursday 2023. Let's get into the charts. So we'll just quickly look at the weekly charts for a second, just to know where we are. So this is exactly where we are, right? Very crucial support zone, very crucial. We're almost getting back into the place where the breakout happened and it moved to the all-time highs earlier. We're just holding on there since several weeks now, and it has to end somewhere. It cannot go on like this forever, right? The price has to either break out of this descending wedge or this parallel channel, or just break down. Either of that has to happen, and it will happen, and that will be big. The longer the price holds or consolidate, the longer it consolidates, the stronger would be the breakout or breakdown that happens. So you have to be aware of that, and that's a fundamental rule of the technical analysis. So that's why we are. We're not getting the daily chart. So we are not getting the weekly charts. I mean, so let's get into the daily what we are interested in, right? Short term. Here we go. This is nothing but a spinning top. Spinning top is nothing but a small body, and it has its levels only on the top of it trend. This is not top of it trend. So the severity of the bearishness of a spinning top is nullified here, since it has appeared in a downtrending mode. If it was happening here on this top, then it would have been deadly, right? It could have been taken more seriously. But small body is always indecisive, and also you can see it is well inside all the big candle of 6th January, Friday, where the big firm was. It is consolidating, and there is more evident in the Banknifty. It's an inside bar and it's a hammer. A hammer also may not have much of relevance, because a hammer at the top of a trend or a bottom of a trend has relevance, as it indicates a reversal. This we cannot say it's the end of a trend. So small short trend, it is at the end of a trend. So that way we can hope that the price moves above the hammer. So if the price moves above the hammer's high, then we can say that this hammer is an indication of a reversal from the downtrending side. So that's a bit of more bullishness seen in the Banknifty for sure, but it's still consolidating inside the engulfed big candle of the previous red candle. So it's very small one, well inside this. Right. Looks more like a harami, more like a harami pattern, and it's a hammer, right, which is inside bar as well, which indicates that Banknifty is consolidating, still consolidating, but there is some bullishness element there. Here small body, indecisive, back to same place where it had retested the previous supports. Basically it has taken a bounce from the Fibonacci 50 today retracement levels on the Nifty, right? Banknifty, it has bounced up from the support zones of the trend line from where it had broken out to make all-time highs earlier. So that same place, so it's very, very crucial zone that we are into. Let's get the numbers of what happened today. It's a flat close today. This 0.10, so 18 points is what that we lost in Nifty. That's nothing. Banknifty closed green, contrary to the Nifty, and it has gained 0.5%, not much. 0.5% is 218 points. And we have seen that it's a spinning top in Nifty and the hammer inside. Also, consolidation is what they have. Price candlestick patterns are indicating. Intraday, it was very volatile. It was range bound. Initially, there was a dip, which was bottom, and then made big point near 1% and 1.5% in the indices, and then it started range bound between 100 and 300 respectively. Right, a small range bound is what happened. Let's quickly see what happened. Right. So it's a big downfall that happened on 15-minute charts intraday, and then pick up move of 1% nearly, and then range bound, 100-point range bound, 300 points range bound Banknifty, right? So this is 1%, and this is 1.5% of buying. So good buying happened when it dipped to below the 43, but it did not crack down. It means a lot of buyers are at this zone. waiting to buy, right? That's exactly what happened today. It was almost near the 800, then it was got bought again. Almost breached, not almost, it breached the 42,000, still didn't crack down, and then it got bought in immediately, and then went range bound. That's the kind of move that happened today. So a lot of things is indicative from the charts today. Let it take it in that, take it in that spirit basically. So see, first of all, you may have closed below the 20 and 50 DMA, so there's no support there, but we bounced from the 100, means there is support there. Banknifty is at the resistance below the 50, so it's not bullish, but it's above the 100 and 200, right? So that's a makes sense. Banknifty is more bullish definitely. So moving average is acting as a resistance and a support both for the Nifty. So a change variety bounce, where the previous resistance acts as a support and then slight bounce has been happening and still continues to be there because it has not breached and fallen down into the place where it had the trend line. So the change in variety bounce possibility is still there. Then there are crucial resistance on. We already see that there is a head and shoulder pattern also that you can see on the daily charts, right? It's not that much very visible. So if you go here you have a head and shoulder pattern, right? The head part of it. So that is also in confluence with all the other supports on where it is. It is there in both the indices. So look at this head and shoulder. This is the head and this is the shoulder. Two small shoulders here. That's on the daily charts, and if you draw the neckline of that, it's exactly the same place. So it's a confluence of multiple supports is where we are. The Fibonacci retracement levels 23, trend line support is there, moving average supports are there, momentum supports are momentum also set supports on RSI 40, and then price action supports are there, lower high, that pattern. It is still not breached the lower high above, neither has it breached the lower low pattern. Change in variety bounces. So it's a confluence of support zones. That is the biggest thing that the bulls would be betting on for the coming days, right? Or probably tomorrow itself. So that's what we are. So I'm not saying much, so that's enough to explain where we are actually. Levels remain the same. 18,000 rounding number, 18,070 is Fibonacci, 38, 79, 59 is also a previous high. These are all the first resistance on the upside. Then 18, 142 and 262 is the resistance on the upside, previous highs. 78, 25, 800, that going to be Fibonacci 50 retracement level as well. It's going to be good support downside, and 77, 74 would be a breach at the previous swing low. Breach of that would mean 17,640 for sure, and further down we are looking only through that. Similarly, the Banknifty 42, 231, 42, 363, that zones, these are resistance immediately. Then after that 42, 566, the Fibonacci 23 retracement resistance as well. Downside 41, 800 would be a support zone. That's where it chopped today. 41,587 would be a support after that. So Fibonacci 38 levels, right? That's a Banknifty. Make a note of these levels and read that along with the OI levels that we'll be looking at later, right? Volatility bands, it's the beginning of the expansion yesterday, and today it's the beginning of a contraction. So it's back to consolidation from the bearishness. Look at this. Yesterday it had expanded downside band. Now it is contracted. So that means sideways is what we can indicate for both the indices. Now momentum is actually sideways on both, right? Both the indices in the short term, momentum is sideways, but it is rising on the Banknifty and then flat on the Nifty. That's exactly how the price action also went on momentum. Momentum has got a divergence, and there's a possibility it can bounce up and then go up till the previous highs. Momentum divergence we have been talking about, that's still valid, where the price is moving up and the momentum is momentum is rising up and price is moving down. So let's see, divergence on the bullishness, that's still valid. Volatility band divergence. Volatility divergence also is there in all both indices, where there is a W pattern bounce up is possible, right? So a lot of things in favor of the, in addition to the price action support zone, beautiful confluence support zone, there is also a possibility of a volatility divergence and the bullish momentum divergence that can lift the market up. So that way there is very good possibility of a bounce that can happen from here. That is all that, but the charts are negative. The price action is negative. The indicators are negative, sideways, not negative. So we cannot say it's bullish. That's just level that we are. VIX is not falling too much, neither it is spiking too much. 15.53, but it's above the lower range. 50 point plus means it's having uncertainty built in it. Futures are short build up in Nifty as usual, but short covering is in the Banknifty. That means Banknifty is bullish. Short covering can lift the market. Boom, it can take it up just like that, an expiry. 17,800, 18,000 is what the levels are indicating for options. So I for tomorrow's expiry, and 42,000 and 43,000, 1,000 point expiry. Highs put and call writing is even Banknifty 0.59 and 78. Look at the difference. One is closer to bearishness, one is Banknifty is closer to the bullishness. So it's contradicting open interest data, price action, and overall strength difference between the Nifty and the Banknifty is what it seems. So Banknifty is breaking out with the short covering, and then this high support and all that price action it breaks down, then Nifty also will come along with that, right? So that's what we have. That's what it's indicating. Look at how the sectors performed. It's an IT and the metal that closed green. It's 0.33 and 0.75. Auto, pharma, and FMCG fell, and FMCG fell more than 1%. Others are 0.52 and 0.66. Reality also closed up, but it's flat close. So IT and metal that is rising up again. They were full down, now that's rising up. Now Reliance is the only one that is in red. Yesterday that was the only one that is in green, I think. So Reliance is closed red, 1.2%, and HDFC Bank, TCS all did well. 1.4% and 1.29% more. No, it's very good move. HDFC Kodak closed green, but that is less than 1%, right? So INFI, HDFC Bank, Kodak Bank, these are only stocks which are the heavyweights category, which is bearish, and other four of the other heavyweights are sideways momentum. So 50-50 kind of. So heavyweights getting sold, and the bearish momentum means FIs are selling only the heavyweights. They keep holding the heavyweight stocks definitely, and they're selling that. They're selling off big giant stocks, large cap stocks, and heavyweight blue chip stocks is what selling is happening. Now, look at this FII participation. It is continuous. It is sold 3,000 crores a day. So it's a 14th day, 2 weeks of trading days. Continuous selling, and 2,430 crores of DI buys happened. That is why market did not crash. Otherwise, we'd already reached the 17,500. So it's a DIs that is support in the market, but there is a worry that FIs are pulling out money, and they had been doing that the entire last year. Now it continues. Now we'll have to see the day when they start buying big. The market is waiting for that. Crude oil. It's rising up 1%, but still below 26, so it should be okay. Now index is flat and some pullback has happened, and it has pulled back to 103.44, which is also good momentum sideways from the bullish zones. Moved to sideways basically. USD has not pulled back too much, but at least below 2082 it has come, so that is good. But it is rising, and it is so it's in the bearish momentum. So if further pullbacks happen, the USD and rupee strengthens further from here, it should be good, along with the crude if it happens, right? The gold is hedging instrument. It has been trying to move up. 70% of up has happened so far in the recent swing low from the recent, and bullish momentum is what you're seeing. So gold as a hedge instrument, whenever it rises up, there is an anticipation that markets may be falling further. So that's the only thing. But this can be good opportunity before it breaks out. It can be used as a hedging instrument. Always is what it indicates. No. This is flat as of now, and US indices are all green as of now. Dow Jones futures showing that, but we'll have to check this pre-market tomorrow how the US indices perform. But basically, US indices just that it's in a descending hedge, descending wedge, and it is trying to come up since last few days and getting back to the top. And if that breaks out from here, that will be very good. And if it does not happen, it fails to hold here and falls down back, then we have trouble. And if that fall is fierce, we'll have to keep a close watch. But if that is consolidating around this for long and then finally takes its own time and then moves up, then it should be okay. As of now, sideways is what Dow Jones charts are showing, but that kind of strength is not that much visible in Nasdaq and S&P 500. Well, moves are there, but still moves are there green, and some it's at a support zone. It has bounced up and moving up. A lot of resistance on the upside for the Nasdaq and S&P 500, but Dow Jones is indicating some reversal attempt to happen. So let us keep close watch out for that descending wedge breakout or breakdown. Major events is that the inflation rates are coming on Thursday, and the job data also is coming tomorrow basically. So volatility can be expected on Friday. And two stock picks, Adani Ports and Bajaj Finance, both short side. Bajaj Finance we have been talking about since long. So some correction may be due here, and patterns also indicate that momentum is in the bear zones, and and the ADX trend indicator also is in the bearish zones, and it is breaking down from a very long, very long parallel channel, trend line channel, and it could be very risk reward if you are trading closer to the support zones and then continue with that, right? Because it has moved substantially, then maybe time that consolidates a bit. But that's what weekly and daily charts are showing for the Bajaj Finance. That's what's continuously appearing in the bearish short side trade opportunities. Right? Bajaj Finance short. Adani Port also is in the short side call. This is not a recommendation, but learning purpose. Why? You have to look at why it is coming as a short side trade. So the momentum has actually hit the top of the trend line channel, and then no, it's not Adani. Sorry, Adani Port is what we have to look at, right? So basically, this is a parallel channel, right? We are looking at this trade. Price moves below this and then goes to the bottom to the 669 kind of level. That possibility is there. There's no interest support. See, which breaches from here 6775. So it's a swing trade opportunity. So box breakdown is not what we are looking at. We are till the box at bottom, box up, box up and down is what is happening. So that interim trade is what we are trying to capture. And so sideways confirm, and bearish is also there sufficient on the weekly and the daily chart. So that could give small short trends trades of few days. Adani Ports and Bajaj Finance short option. That's the topics for tomorrow. Now let's wind up for Jan 12th, Thursday expiry day tomorrow. What are we? Today what happened is very clear. It's consolidating. It's volatile. It's range bound. It's flat closing. That means it's a crucial resistance zone which is acting as a support, and then that is where the breakout happened from, and that is where we are back. Multiple times we had attempted to breach and go down inside, but it's holding that. Some confluence of supports are holding it in favor of the bulls, but price is less than moving average. Bollinger Bands downside bearish bias, sideways momentum, trend bearishness is still there. FIs are heavily selling. Rupee is weak, and you continues to be market is still very close to a resistance zone of the descending wedge. Huge markets I'm talking about. So all of this gives tells me that the charts are speaking loud that it is still the view for the next day is mild bearish. The tomorrow is an expiry day, so you can expect volatility for that. But the levels to watch is between 17,800 and 18,000 is where things may be happening. It may not breach the previous swing later tomorrow is what we can hope for. If that happens, then it can be a big crash that can happen. So, but the option riders, may bet on these levels and try to capture 18,000 probably tomorrow. Or if it crashes down, it may try to settle at 17,800. So median to levels are 17,500, 18,300 upside and low side for the Nifty. Upside and Banknifty 41,500 and 43,000 for the bank levels to watch on the medium term, not for tomorrow. So that's my bearishness continues. Then I hope this market study and analysis had brought in some clarity to your thoughts and some clarity on how we can plan better for the next week. If it has helped you in some way, please subscribe if you're not subscribed, and share it with friends so that more people comes to know about it and keeps us motivated to have more feedbacks and inputs and suggestions. We can make this community great if that happens. So please forward to your friends and colleagues and put in comments, feedback and all that. Okay, thanks for watching. Happy trading, happy learning, happy investing. Bye.